Everyone, Dean Ouellette with the Real Estate Tube here. I'm here with Dan Keller, FHA mortgage lender out of Seattle. Dan, how you doing?
Good morning, Dean. Good, thanks.
So today is October 4th, 2010, and real estate agents and lenders woke up this morning with a new set of guideline and rules for FHA mortgages. Can you tell us a little about the changes?
New rules today. Okay, so in the past with FHA, as we've seen it change a few times over the past few years, but most recently with FHA, there's two ways that FHA collects insurance on their loans. The first is with an upfront premium fee, which prior to today, it was 2.25% of the loan amount. And then there was an annual or monthly, which was 0.55%. Today, that's changed. So today, we're looking at a 1% upfront mortgage insurance premium, but the monthly that's what's been affected. The monthly's gone up to 0.85 to 0.90%, depending on how much money the borrower is putting down. So I recently, last night, I blogged on my website and I did a chart, a comparison. On a $400,000 loan, it's a difference of approximately $90 a month.
So, correct me if I'm wrong, this is going to be a benefit up front for a buyer because they're going to be able to get into it with less money down, but in the long run, it's probably going to end up costing them more money, correct?
Yeah, I mean, mortgage insurance, however way you want to slice this, it's an increased cost, and FHA needed to do that in regards to their reserves, their insurance reserves. I believe I read an article the other day, FHA is down to $3 billion in reserves, and in 2008, they were at about $19 billion. So, I mean, obviously with the popularity growing with FHA loans, and it's an absolutely great loan program, I believe they're taking advantage of this right now to basically build up those reserves for FHA. It's gonna cost you it's gonna cost the borrower either way, over time. But what I put in that blog, it's important to realize it's not gonna start. I mean, the break-even point on these new guideline changes is approximately 3 years. I believe it's 3 years and 7 months. So, I mean, it depends on the goals of the borrower, and I haven't been forcing and putting the heat on my realtors and my borrowers to say, hey, get off the fence. If you're thinking about buying, you got to do it before, October 4th. Making decisions when it comes to a mortgage and buying real estate, I believe a little bit more thought and time needs to go into it. But, however way you slice it, it's going to be a little bit more expensive on a monthly note.
Now, as far as two rumors that have been out there, I don't know if they're actually true or not, you can help us with these, is the first one is that seller contributions is going to go from 6% down to, I think, 3.5%, I heard, and also that potentially the down payment required is going to go from 3.5% to 5%. Are any of those true?
I've heard them both, and quite honestly, as of today, October 4th, there's talk every single day that we read and we hear that things are going to change. I believe change is in order. Yes, that's going to happen. But as of today, I can't verify that with you. But yeah, I mean, I'm hearing it just as much as you guys are.
And what about the credit score? Now we know that. First of all, I think we should educate our consumers real quickly on FHA. FHA does not actually lend money. What they do is they, correct me if I'm wrong, back mortgages, and if certain mortgages meet their requirements, then they're guaranteed to back them. Is that correct?
Yeah, I explain FHA as an insurance company. Honestly, I mean, that's basically it. They're insuring those loans, and that's, I believe, like I mentioned a few minutes ago, that's why these changes, and we're going to see these changes occur, is because the reserves as an insurer have, since the foreclosures have increased, have substantially dropped. So yeah, it's simply FHA is simply insuring that loan. That's basically what their role is.
Now, is there going to be any change as far as a credit score that's required to get a loan?
Right now it's 620. Again, I'm hearing that there are going to be changes. But as of right now, no, the focus right now that I'm, with every single one of my clients, if we're flirting with the lower 600 to 620 to 640 range, I'm always going to encourage my clients, to aggressively approach improving your score through credit repair, through if we can do it organically with paying off debt, etc., or paying down debt. That's it's in the long run, that's going to save you money as well. So I mean, that's something that I'm hearing that along with what you just mentioned before with the down payment increasing, etc. So right now 620 is where we're at, and that's honestly it's a pretty lenient qualifying guideline if you ask me.
Now, with all these rumor changes and the changes with the insurance that is happening, it makes you think that, as you mentioned, FHA is having some financial issues, some concerns. Do you see any great concerns going forward with FHA?
Yeah, it worries me. I mean, 2008 wasn't that long ago, and $19 billion, and we're talking about a $16 billion reduction in reserves. So I mean, from an FHA mortgage lender standpoint, yeah, I mean, if you ask me my honest opinion, there's going to be change. I believe they're going to take action like they're doing right now, in regards to upping the annual mortgage insurance premium fee. I think you're going to start seeing changes to protect that because of the popularity of the program.
All right, Dan, if somebody wants to just sit down and look at what are really the differences between what was going on last week, what's now, and the changes, and learn more on FHA, where could they go?
The blog that I just wrote last night at mymortgageguydan.com is going to detail the previous FHA guidelines and the current, as well as I stack the previous and the current next to each other, and I use a $400,000 loan amount as an example. So I think I would recommend going there, and then I also really briefly and in very simple terms explain the role of FHA. I think that's something, when you hear of these changes coming about, the first thing that the media and that people that don't quite understand what FHA is they want to bash it, and they want to, oh gosh, this is going to destroy our business, and this is going to make it tougher to buy homes. Well, you know what it is, but FHA is it's a brilliant loan program, by far the number one loan program that I write up here in the Seattle area. So, I detail it pretty simple, but I provide enough information, I think, on that blog that really explains the changes.
Great. And if somebody is looking for an FHA loan in Seattle, how could they get a hold of you?
My website, mymortgageguydan.com. All my contact information is there. Let's just keep it simple. So I would visit that, and I keep you up to date on all the changes, not just with FHA, but with HUD, with VA, and a couple other loan programs that are hot up here. So I'd recommend my website.
All right, Dan, thanks for your time.